So welcome back, traders. Sorry about today. The network has been really bad on my side, but I think we are good now. So as I was saying, the trade on gold, we haven't taken a trade on gold yet. We are still waiting for price to get back up to this level we have drawn from the 4-hour time frame. We can't take a trade right now. Price is in the middle of nowhere. It's in a push phase. Any buy we take here, there is a high probability price might pull back and stop us out. So you shouldn't be taking any buys right now. You should wait for price to get back up to this level. If you scale down to the 1-hour time frame, you can see its price wants to pull back. So imagine you have taken a buy here, you will get stop out at this level or probably this level. Price might retest this area. So avoid taking any buys right now. So let's check on pound JPY and see if we can get a trade. Price has been trading above the trend line. Price hasn't broken this trend line, and that is a sign that price is moving up. Price is making higher lows, higher lows. So if you want to see trade this, you can either wait for price to get close to the trend line, and regardless of I don't know how you enter your market, but I personally use the buy stop entry. So you can use the buy stop entry to take a trade here back up to these highs, or you can sell stop order around this level, so that if price start breaking below the trend line, you can get trigger in for a sell. But right now you shouldn't take a trade. Still wait for price to push a little bit down into this level here before you can take a either buy or set your sell stop order. I think that's the analysis on pound JPY. And if you're on the live stream, you should like the video, subscribe if you're a new viewer. It does really good for the channel growth. It takes you a second. I really appreciate. So let's check on and see what's happening there. US oil is pushing up from the 4-hour time frame, but we are still waiting patiently for price to get back up to its highs to look for a trade. Remember, if you really want a high probability trade, you need to be taking your trades at key levels, low probability trade, and your chances of winning that trade decrease dramatically. So you shouldn't be trading like that. You only need 1 to 2 good trades per week to be profitable in Forex. You don't need many trades a day. So that's the idea. Just focus on the few, not the many. Take a high probability trade. And if you're just joining us on the live stream, we have many viewers but few likes. If you like the video, it takes you a second, but it does a lot more for the channel's growth. So one thing we want to talk about is the trading plan. If you don't have a trading plan as a trader, you are not ready to be successful in trading in Forex, because that's your edge. The most profitable traders you see online, all those gurus, they have a trading plan. A trading plan is more like a system you use that keeps you in the game regardless of the market condition. If you don't have a trading plan, you are going to be impulsive, and you will not have a good arsenal to attack the market with. So a good trading plan includes your lot sizing, your risk management and strategy. You need to define what strategy and patterns you are going to be taking when you come to your charts, and how many trades are you going to be taking per day. So this all includes in your trading plan. It's not about just having the trading plan. Another thing is following up and sticking with your trading plan. That's the second thing. Not about having it, but being disciplined enough to stick to your trading plan. If you are really serious about forex trading, you should consider having a good trading plan and discipline yourself. And we are launching a VIP trading signal and master course on the 17th of this month. So you should check out our page. There's a lot to be learned. You will learn a lot about profit, about passing your challenges. If you are going to be taking your profit challenge, things to avoid doing, the strategy and risk management and lot sizing you need to pass your evaluation, get funded. And we are going to be showing you proven strategy. You only need 2 or 3 strategy to be profitable in the market. So if you are really serious about taking your trade to another level, check out our page, contact us. We are kickstarting the group on the 17th of this month. So you should contact us and you'll be added to the list. So let's get back to the chart. Thank you. We have more viewers. We only have 1 like. If you're on the stream, if you are a new viewer, if you haven't liked the video and subscribe, you should subscribe. We are always having this live stream every day. We trade the New York section for an hour. We share tips on how to trade and strategy. So you gain a lot. You get notified whenever we are starting this live stream. So if you haven't subscribed, you should subscribe to the channel, like the video, and okay, we are currently on the gold chart. So what we said, if you have been here with me when we started, we said we still expect to come back to this level, to this highs, this weak area. That was why this is a key level. You can see multiple weak rejection. It's a sign that it's a strong sellers are sitting around this level, because every time price comes to this area, it leaves a wick. So it's a strong level. That's a sign of a strong level, and that was why we drew this level here. So we still expect price to come back to the level so that we can look for a trade, because this is a high probability zone. If you take your trade at key levels, it gives you the chance to have a much smaller and safer stop loss placement, and your probability of winning your trades increase dramatically. So that's one of the important reasons of taking your trade at key levels. We can actually take a buy here, but the probability of winning decreases, because our stop loss must be below this level, because price is still allowed to come back and retest this level here. It has broken above, so you can see your chance of winning decreases, and this is not how you want to be trading. If you really want to make money in forex, you shouldn't be trading like this. Our trading is 90% waiting and 10% execution of your trade. That's how the top successful traders trade. They have a good risk to reward management, and they take high probability trades. They take 2 to 3 trades per week. So as you can imagine, 2 to 3 trades, and that's a high probability trade. Once they win those trades, they walk away from the charts unless they see another good opportunity. So if you really want to make money, you should start doing that, focusing on the few, not the many. Let's check on pound JPY, see what's happening. So this is another thing I said. Price is trading above the trend line. It's making higher lows. It hasn't broken the trend line, so we are still looking for buys. But to buy this market, let's scale down. We need price to come down a little bit close to this level for us to take a buy, because you can see the range. Any buy we take here, our stop loss placement will be very big, so we have to wait for price to come a little bit down close to trend line to buy the market. Because look at what happened in the previous, when price comes to the level, close to the level, a bullish momentum, price turn green again. Same thing happens here. When price come close to the level, market start pushing up. Same thing happens here. So all we are waiting for is for price to get close to the level, this trend line, and show us sign like weak rejection. You can see weak rejection before the candle turn bullish again. We can see 2 weak rejection. You can see multiple weak rejection. So once we start identifying failure to push down, or we start seeing multiple weak rejection around the area, we will know that price is planning to start to continue up, because this is how the market works. The market works after a push phase. We have what we call an exhaustion. Sorry about the English. So after a push phase, we have the exhaustion, then a continuation up. So this is the phase of the market: push phase, exhaustion, and a continuation up. As you can see, this is a push phase, exhaustion, continuation, push phase. So that's how the market works. So now the market is in a push phase. So, and the way we enter the market when price is moving up is after the exhaustion. Then the market are exhausted around this level. That's where we take the buy for a continuation up. We don't take the buy here up here, because price will pull back and stop us. So we take the buy after the market has pulled back, and this is a push phase. We are waiting for this pullback to come down to this level and show us sign of multiple weak rejection for us to take the buy. So that's what we are waiting for. So let's go back, let's check on US oil. And like I always say, if you are just joining us on the stream, you should like the video, subscribe to the channel so that you get notified whenever we are having this live stream. It does a lot more for the channel, and there's a lot to learn. We give you trading tips and show you the strategy, the risk management, and lot sizing you need to be using, especially when you are taking a profit challenge, or if you are trading a personal account, because most people take on trades without a stop loss. Stop loss is very important. As a trader, always have a stop loss on your trade, because most traders are afraid of losing, so they have a bigger stop loss or no stop loss at all. Shouldn't be doing that. Once you are wrong, you are wrong. You should cut your losses, and through cutting your losses, it removes the emotion, because when you use the stop loss, even when you are not on your chart, the stop loss placement helps you and stop the trade. It stops you from losing more. That's one of the advantage. But when you take a trade and you are always on your charts, you become irrational. Let's say, for example, price was moving your direction, and start pulling back on you, and you start losing your profits. You get emotional and you start doing dumb shit. Instead of closing your trade early, or opening multiple positions at a time. So you shouldn't be doing that. Always have a stop loss on your trades. And what I would advise you, just try it. Try taking 50 to 100 trades. Once you take the trade, set your stop loss and walk away. Don't look at the chart every 1 minute. your emotion runs high. We all have emotion, but how you handle your emotion on the charts is going to determine your success in the market. So you shouldn't be doing that unless if you're a disciplined trader and you know how to control yourself and keep your emotion in check when you're on your charts. Because most gurus tell you about trading without emotion. That's impossible. Because it has been proven you can't make a decision without emotion. So the emotional side of the brain is very important for decision making. The only thing you need to be disciplined enough and controlling your emotion when you are on the chart. I remember when you are in a winning trade, that doesn't mean you are a good trade. And the same thing applies with a losing trade. So not because you are winning or losing, one trade doesn't define you as a trader. One trade doesn't define you as a trader. All of us have losses. There are days I have multiple streak of losses, but I have a trading plan. I can only take 2 trades per day. So whenever I have 2 losses at a time, I close my charts and walk away. So that system helped me a lot from revenge trading and over trading. And one of the mistake traders do is when they are winning, they keep trading because overconfidence sets in and they think they are winning because they are smart. So they become too overconfident and they increase their lot size and they end up blowing up their account. But just part of your trading, that's why it's very important. I told you guys I'm launching a VIP group and master course on the 17th of this month. Check out my page, you get a link, you contact me. There's a lot to be learned, especially about risk management. If you can't protect your capital, you won't be long in the market. If you don't have a good risk to reward, if you don't have a good risk to reward and a good risk management and position sizing, you are not going to be you are not going to stay long in the forex. You are going to be crushed. That's the truth, and you won't make money. So you need. I think the number one thing I will be saying is your risk management, because if you don't have capital, if you don't have funds, all the other strategy, where are you going to use it? You can't use it anywhere. So I think the most important thing I will be teaching on that course, the first thing on the list is your risk management and position sizing. I will show you the lot size you need for each of your account. I don't know the account you are trading. I don't know if it's a personal or a pro firm challenge, or if you are taking an evaluation. I don't know, but I'll be making the analysis, giving you the position sizing you need and how many trades you need to be taking per day. And remember, you don't need to be trading every day. You don't need to trade every day. Whenever there is no trade or good trade or high probability trade, you should walk away from your chart. For now, I think the pro firm have removed the limit, the days, trading days. It's unlimited now. So you don't have the pressure of always constantly trading every day, even though when there is no chart. That's if you are trading a pro firm challenge. So I think that area have been solved unless you are trading a personal account. So let's go back to the chart. So price is pulling back right now. And let me tell you the truth. Today is Monday. There's no The market is a little bit slow. That's the truth. That's why we haven't taken any trade yet. We are still waiting for a good trade, and hopefully we can get a good trade before the end of the session. So that's another lesson today. Just because you're on your chart doesn't mean you should take a trade. Sometimes you just need to observe the markets. Not every day you are going to make money. Some days you will be on your charts. Just you are like a hunter when you're on your chart. You're just waiting for the perfect moment, perfect opportunity to take your trade. Imagine a hunter entering the forest and shooting randomly. He will waste his bullet without going home with any gain. So that's the analogy of a forex trader. You need to you need to be you need to look for the perfect high probability trade and moment and take the trade. Because and one of the things that stop most traders from succeeding is fear. Sometimes a high probability trade comes along, but at that moment fear kicks in. They don't take the buy or a sell because they are just waiting. They are waiting for the market to be perfect, and they will just keep waiting and see the market move in their direction, and they start beating themselves up. If you are waiting for, if you have a plan and you are waiting for your plan to play out, once that start happening, you should take the buy or the sell. As long as